Welcome everybody. You've made it to the Financial Practices and Forecasting for Growth workshop. I'm going to jump right into my slides here and share my screen. Here we go. Okay, so this is for you if you're feeling a little bit disoriented around what financial practices you even need to be doing on a routine basis for your business, or maybe you have some things in place, but you still don't have a strong orientation around how money is flowing in and out of your business and what you should be tracking for your business on the financial side of things. So quick overview of what we're going to be talking about today. We're going to look at some of these key financial practices, routines, and rhythms. We're going to learn actually a revenue forecasting tool that I've been using in my business since day one. I joined an accounting mastermind group early on in my business to learn how to grow what started for me as just a bookkeeping services firm, and it's grown since then. Now I provide strategic accounting, bookkeeping, and coaching services for integrative health practitioners. So this cash flow compass tool, it is cool. And I'm going to give this to you, participants who are attending here today. If you're watching the recording, I believe we're going to have a link attached to the recording. So yeah, that's going to allow you to set goals and also track your revenue on a weekly, monthly basis to see if you're on track for hitting those goals. A lot of folks I see setting goals, but not actually tracking them. So this is going to give you a chance to actually adjust in real time, calibrate your strategy in real time to either adjust your goals or adjust your strategy for hitting those goals. Okay, so that's what we're going to be talking about with this tracking part of the tool. We're going to have some time for Q&A at the end. Okay, so I introduced myself just briefly on the previous slide. My business is called Livestream Business Services. Again, I provide strategy, coaching, accounting, and bookkeeping for integrative health practitioners and clinics. And yeah, I'm going to be sharing with you a little bit about what brings me to this work. In 1982, I was born to a medical family. I lived a very sheltered suburban life. My parents happened to meet in medical school, so I grew up learning about healthcare and hospital life every day at the dinner table. I realized pretty quickly that's not the path I wanted to choose for myself. I was pretty lost as in terms of what I wanted to do with my life when I was in my late teens and in my early 20s. I just had this amazing opportunity to just kind of land on my lap. A friend of mine from high school invited me to join a rock band. We had a record deal with Epic Records, and we recorded an album in an amazing studio in Vancouver, Canada. We toured the country. We appeared on MTV. We had a song on the radio. It was kind of a dream come true that I didn't actually totally have. It was totally some kind of interesting, fun luck, but it wasn't always so fun. I actually saw a lot of life in a very short period of time, and I realized the rock star lifestyle was not the lifestyle for me. It had me kind of running to the hills to some extent, just to find my own inner peace. I ended up spending, after the band broke up, I spent 15 years at a meditation retreat center in the rural hills of Southern Oregon. And it was a beautiful time of life. I was much happier than I was as a rock star touring the country. And yeah, and so they very quickly realized, oh, this guy, he took calculus in college. He looks like he's pretty good at math. Let's throw him in the bookkeeping office. I ended up doing nonprofit finance for 15 years. And in 2020, you could say my style shifted a little bit. I ended up leaving the ashram to start a bookkeeping business to finance my education in Ayurveda and somatic experiencing. What I didn't realize was, living with very minimal money, being pretty disconnected from the economy for more than a decade, I had no idea that I had an aptitude for business. But as I started my business and started growing it, I realized that I had something to offer. And I realized that all those years in nonprofit finance gave me some skills and knowledge that could have very real applications for the folks in the mind, body, spirit, healthcare world. So I ended up blending my passions for mind, body, spirit, health, and my desire to help folks who are doing amazing work just find their own way in right livelihood, being able to make a good living, make decent money, doing the work that they love. And so I provide business coaching and financial services to help folks do just that. Okay, so we're going to get right into the exercises here today. I'm going to share my screen. Oh, we're already sharing my screen. So I'm just going to flip over the tab. I kind of like having the tabs up here. I can just jump back and forth. So the first tool that I'm going to share with you is what I call the Artha Sadhana guide sheet. These are routines and practices. You could say even money rituals. That's a term from Barry Tussler, money rituals. Barry Tussler is a financial therapist, and she actually had a bookkeeping firm when she started started in her career as well. So she's an interesting blend, kind of like me, bridging this gap of financial services and financial literacy with the softer side of money, the emotional side of money, emotional literacy. And there's other elements in here in terms of just even knowing ourselves. There's spiritual intelligence, I believe, as well, when we can see the connection of how money supports our deeper purpose in life. So I digress. This guide sheet is actually really practical. It's kind of boring, but I put a spin on it to help folks who kind of like myself, who orient from a place of meaning and purpose, the meaning makers of the world. Something's got to be meaningful for me to want to do something. That's why I couldn't just start any business. I needed to be in a business where I was helping people, or making amazing impacts, helping the world heal, in a world where people need healing more than ever before, right? So I'm framing this in terms of like, hey, our money practices, being able to run our businesses effectively. If we're running our business as, the reason why we stepped into business is a form of a higher calling for those of us who are in integrative health. If you're in the yoga professions or Ayurveda professions, I'm sure that you feel that even more so. Naturopathic doctors. So running our practice, running our business effectively becomes part of that purpose. And unfortunately, I see a lot of folks avoiding this side. And I think it's partly just because we never learn it in school. Even in grade school, we live in such a money-driven society, yet we don't learn money skills. We don't learn how to use credit cards. Typically, we didn't learn that in my school, at least. And a lot of the folks that I talked to, they didn't learn it in their schools. And I go more into sort of the various lenses of diagnosing what's going on in our society to lead to this massive disorientation around money. I talk about that more in my pricing workshop, the Price is Right workshop. For those of you who may not have attended that yet, I recommend checking that out. But back to the Artha Sadhana guide sheet. I'm going to break down the Sanskrit words here. These are Sanskrit words. And just so those of you who may not be as familiar with the terminology, so you can have a deeper understanding and appreciation of what I intend this otherwise somewhat business processy, kind of boring sheet. I shouldn't label it as boring, but we're trying to make it sexy here. So, okay, so the Artha part of this term is referring to material wealth, prosperity, economic security, which are essential for living a fulfilled life and supporting one's sacred work in the world. So Artha comes from the theory behind yoga tradition, not just the physical yoga, but the philosophy behind yoga. And according to that philosophy, there's 4 primary aims of life. One of them is what we come to understand as spiritual liberation, or moksha is the Sanskrit word for that. Another one is contentment or desire, passion. The Sanskrit word for that is kama. So I group all these together. There are different dimensions of this word kama: pleasure, passion. So the third one is artha. Artha is having the material resources for fulfilling these goals in life. And of course, we have dharma. I should have named dharma first. That's actually typically the order that it would be put in. Dharma is all the obligations that we have to fulfill as human beings in this world. And of course, moksha it's like the spiritual dharma, right? So dharma would be our responsibilities towards our family, our responsibilities toward our society. It could be part of this inner calling that I came into this world. Perhaps some might call it coming into this world with some destiny karma, perhaps, to fulfill a very specific role in the evolution of humanity and society. And as a healer, maybe that's the case for you. So Artha, and this is another image that I have in some of my presentations, Artha becomes sort of the foundational piece of this pyramid of fulfilling these other aims in life. If that's not there, it becomes very difficult to carry out our dharma, to carry out practices that will allow us to pursue spiritual liberation or moksha. That's not to say, not to digress too far here, but that's not, we can simplify our means to such an extent that we can live off very little. But we still, most of us here in this world still need to eat at least a bowl of food and have some form of shelter over our head. And in today's society, that requires usually money in order, or some sort of exchange in order to allow for that. Okay, so common sense things, I know. Sadhana is a Sanskrit term that refers to a spiritual practice or discipline aimed at achieving a specific goal or transformation. So I refer to this Artha Sadhana guide sheet as such. This is a set of habits, routines, principles, and tools to support financial prosperity for a small business owner. Okay. So just framing it up, that's why this is important. That's why it's important that we engage in these boring, tedious, nitty-gritty things like managing our finances in our business. So anyways, if we don't get anything else out of this presentation, if you can at least come away with, okay, yeah, I see it. It's important for me to do these things in order for me to support what I'm here in this world to do. Okay, so general principles when it comes to understanding how to manage our finances in our business. One of the first things we need to know is our business entity type. It's kind of like knowing your body type or your blood type, or, it's funny because I don't even know my blood type, but it's really important. Once we know the nature of the car that we're driving, the vehicle that we're driving, we know what types of things that we need to do. So if you're driving a diesel vehicle, it's going to be a lot different than driving a gas power vehicle or an electric vehicle, right? So there's not a ton of different types of business entities here in the United States. If you're in other countries, it's probably, a lot of countries are similar, but there's probably going to be some variation. So you just have to speak with somebody in your local area. So oftentimes there's government funded business development groups that you can consult for either low cost or no cost. In the US, we have SCORE and we have SBDC. I have those as resources at the bottom of the sheet. And the link to the sheet, you'll have it, I believe, also somewhere around the recording. So knowing your business entity type is really key. You'd be surprised how many folks don't know exactly what their business entity type, and it can be confusing because there's two different types of business entities. There's the legal type, and then there's the financial type, the type that the IRS cares about. And so it's not super straightforward. Once you get it, though, you'll get it. You only have to remember yours. You don't have to remember everybody else's. So you'll have to know, okay, am I a sole proprietorship or am I an LLC? Am I a single member LLC? Am I a multi-member LLC? Maybe I have an LLC and I've elected for S Corp status, right? If you're a little bit larger, maybe you have investors, maybe you formed as a C Corp. It's not as common for small clinics. Okay, just gonna let my participant in. And yeah, so once you know your business entity type, that's the first step. Second step here is to make sure that you've started a business bank account if you haven't already. I know this is totally common sense, but you'd just be surprised, especially in the early stages of business, how many folks don't have a business bank account. And maybe you do already have a business bank account, but here's where it just takes a little bit of extra discipline and being careful and just being organized of really only using your business bank account, really only using your business credit card when you're paying for business expenses, and only using those when you're actually bringing in money from clients or patients. So that means we don't want to use our personal credit card. We don't want to use our personal bank accounts and debit cards when we're paying for business expenses. It just makes it really difficult to track your business finances when that's going on. If you run an LLC and you're in the United States, That's also an occasion, we call it commingling. That's the jargony term that we use in the accounting world. Commingling is where we're mixing our business and personal expenses. And if you have an LLC to protect you legally, and you have a situation like that, if you actually get pulled to court, the lawyers, the prosecutors on the others, it could be a prosecutor or just an attorney, they're going to be looking for holes to poke on your business if they're looking to get money from you. And if you haven't been running your LLC the way a LLC needs to be run, which is keeping business and personal separate, it basically nullifies the protection that the LLC affords for you, which means if you have personal savings, if you have a mortgage, if you have like an IRA or these other things, those become exposed, those become vulnerable in those settings that, maybe those don't belong to your business, but in those cases, if your LLC is annulled, then you're at risk. Okay, so third thing that's not super fun, but pretty important is keeping a paper trail. So everything that you purchase for your business, every business expense, basically you're telling the government, hey, I bought this thing for my business and I'm not going to pay taxes to you for my income for the amount of these total expenses, right? So the government's going to want to know if they ever come and check on your books, they want to know, like, are those legitimate expenses that are supporting the profit of your business? Do they have a direct profit objective supporting your business strategy or your business's function? If not, it can be very questionable. So in other words, if I have a home office and I do a whole home renovation and I call that a business expense, the government might throw some question marks all over that, right? So, it has to be, and this is where you want to talk to a tax accountant to know where the lines are in terms of what you can write off as a business expense or not. But if you do write it off, you want to keep a paper trail because, most of us in business are writing off tens and thousands of dollars, maybe even hundreds of thousands of dollars every year to run our business. Imagine a scenario where, tax agencies come in, they want to see that paperwork. And okay, I don't have a paper trail. I don't have anything to show you. Believe me, I spent all that stuff on my business and it was legit. They may not take you on good faith. So if they say, hey, you don't have any paperwork, you don't have any receipts for this $50,000 worth of expenses, we think you owe taxes on that. Guess how much that is that you would owe? 50, let's say it's 30%. What's 30% of 50,000? I'm not going to do mental math here. I don't want to embarrass myself. $15,000. That's a lot of money. So just to kind of help you understand, your paper trail is super, super valuable. Your paper trail is saving you $15,000 of potentially owing more taxes for those deductions, right? Okay, so have it somewhere. If you have the receipts coming into your email box, at least it's something. Don't delete them. Keep them in your email box. Better yet, there's virtual file cabinet solutions that you can be using. I call it a virtual file cabinet, but if you have a Google Drive, that's a virtual file cabinet. If you have Dropbox, that's a virtual file cabinet. You can be putting your receipts there so that you can get them in any case where you might need to show them. There's a virtual file cabinet that I really like. It's called HubDoc, and you can set up rules and automations such that when an email from certain vendors comes in, it can automatically forward to your virtual inbox and throw it in that inbox. So HubDoc is the one that I recommend to clients. It's like $12 a month, but if it's saving you time, it can be worth it. And if it's saving you from having to pay an extra $15,000 plus in taxes in the case of an audit, then 144 a year isn't that much. Okay, so tracking business mileage in the United States, we have business mileage deductions for travel. So, having an app on your phone, there's so many different apps you can be using. If you're in QuickBooks, there's a QuickBooks thing that you can put on your phone to track mileage, or even just a simple notebook, just logging it. For me, like I have a spreadsheet and I don't take a lot of business trips. If I'm driving to the airport for a business trip or something, I just kind of log it as part of my weekly or monthly financial routine. Okay, so let's get into the routines themselves. Just the same way that we have routines for when we wake up, we have routines for eating, we have routines for going to sleep. And for those of you in the health practitioner world, especially Ayurveda folks, routines are really vital for maintaining health. So much of our body is governed by the circadian rhythm. So much in business is also uh, connected to rhythms. And when we have rhythms in our business that are established and regular, it makes it so much easier to keep a business organized and running smoothly. So, one of the first things I often recommend to clients is developing a weekly routine for financial management. And there's weekly routines, there's monthly routines, there's quarterly routines. And believe it or not, just to kind of, for the yoga and Ayurveda folks here, these are not new. If we look back even to the Vedas, I just sent out an email and published an article on this. Um, these rhythms have actually been talked about for thousands of years. There's a guy named Chanakya who actually helped get rid of Alexander the Great when he invaded India. He helped unite the sort of independent monarchs of India at the time. He helped them come together and unite basically as an allied force to get the colonizers from Greece out of, or in Macedonia out of India. And he was a very effective administrator. And so one of the things that he was talking about to his folks was the value of having weekly, monthly, and quarterly routines in the way of governing large government bodies. And one of the main functions is, of course, collecting tax. So they're working with money as well. So this has been around for a long time. In modern accounting, these rhythms and cycles have really been only talked about in literature for maybe 200 years. So this has been around for a long time. This isn't new. But again, I digress. Let's get back to it. I encourage clients to check bank balances and credit card balances on a weekly basis. I know it seems like overkill and maybe redundant sometimes to do that, but you'd be surprised. It's like, of course, you're the one holding the card when you make a purchase. Of course, you're the one on the website plugging the card information in when you make the purchase. But especially in business, there can be a lot of action flowing through those cards and through those bank accounts. And so it's worth going through and checking those on a weekly basis. If you're doing it every week, it allows you to catch something. What was that? That wasn't supposed to be charged, or dang it, I got double charged for that thing, or those types of things. If you can catch it quickly, you're a lot more likely to get a refund. You're a lot more likely to realize, oh, I shouldn't be paying for that app subscription anymore. I'm not using that anymore. Also, yeah, so key principle here is investigate any transactions that you can't explain. Again, this is kind of just a discipline. What I notice is when I fall out, yeah, even I fall out of my routine sometimes if I'm traveling or doing different things. If I've gone too long without doing my weekly routine, and it's like sometimes something slips through, and all of a sudden I can't get a refund for it. So I often kick myself if I can't do that. Awesome. Awesome. Okay. Thanks for throwing that chat. Um, awesome to have you here, Susan. Okay. So let's see here. Credit card accounts. Again, same routine. Review all transactions. Inquire into any transactions you can't explain. I recommend paying off credit cards on a weekly basis. Here's why. So cash flow is not the easiest thing to understand for folks, especially, okay, you have a certain amount of money in your bank account and you're running up a balance on your credit card periodically, and then you got to pay it off. And if you run up a big balance on your credit card and you have a certain amount of money in your bank account, some of that money actually isn't going to stay there for very long because you're going to have to put it towards that credit card balance, right? So how much cash in your bank account that actually belongs to you is different in a way from how much is actually there, if that makes sense. So by paying off your credit cards on a weekly basis, it ensures that your bank account balance is a little bit more of an accurate reflection of how much cash you actually have at your disposal. Now, if you're running up a 0% APR credit card and using that to finance something, okay, that's a different situation. And I don't want to get into the weeds of that right now. I do have an article on that, by the way, and that's a very effective strategy for financing your business if you do it well, if you do it right, if you have a strategy, if you're managing your credit cards effectively, and if you effectively grow your business to then pay off the debt after 12, 15, or 18 months, or however long you have the 0% intro period for. Okay. But I recommend otherwise, if you have a credit card that you're simply using for what I call operating expenses, the expenses that are just of a routine nature that you're going to pay off that balance at the end of the month, I recommend paying it off weekly. Another thing that does is it keeps your credit card utilization on the lower side. And that looks good for your credit score. So your credit score goes up when they see that you're paying off your credit card balances and you're not like, if you say you have a total credit limit across all your credit cards of $30,000, and if you're always at like $25,000, that's like a very high percentage of credit limit utilization. And the credit score folks see that as higher risk, and they may actually reduce your credit score, which can affect your ability to get more credit cards or get financing for a home or different things. Okay. So then we have the bookkeeping aspect of the weekly routine. And there's two pathways here. One pathway is you have an accounting software like QuickBooks Online or Xero, or there's a free software out there called Wave, which I'm not a big fan of, but for very simple businesses, if you're doing bookkeeping yourself, that can work as maybe like a first stage solution. Some people even use YNAB, which is really more of a personal bookkeeping accounting software, but it can work for a business. I've seen folks doing that. And there's others, and I'll have a list of them further down on this sheet for you to check out. But essentially, if you're doing bookkeeping in one of those softwares, you want to go on a weekly basis and code the transactions. And I recommend doing it weekly because that way it's still fresh in your head. You'll remember, oh yeah, that thing that I got from Amazon was for this. Otherwise, if you wait till the end of the month or wait many months, chances are you're going to have no idea what that Amazon purchase for $14.50 was, right? So I recommend going in weekly. If you don't have an accounting software, then I recommend having a spreadsheet, maybe a simple spreadsheet. There's folks online who you can find like a simple bookkeeping spreadsheet system from them, and some folks are even teaching how to do that at a very low cost. So that's a reasonable route to go. There's pen and paper. I see like my mom and dad, actually they're very intelligent doctors, but they kept their own bookkeeping in little notebooks, which was, I respected that. They grew up in a different age. They didn't have computers when they came into their adulthood. So they just did what worked for them. So find what works for you. And the main thing is that it's a system that you can be consistent with. And if it's a system that you can't really ever settle into, that's where you may want to either hire help, someone who's going to help you do that, like a bookkeeper, or potentially an accounting firm, or you may pay somebody to train you on how to do it. And give yourself, I would say, like at least 6 months to settle into a new system, especially if it's something like a Xero or QuickBooks or Wave, because take some time to learn how to manage these systems well. And I don't think it's the type of thing that I would not recommend trying to figure it out all yourself. There's two things. There's software skills. There's also just accounting background knowledge that's important to understand when you're using these softwares. So I think it's really smart. You may actually be paying more in the beginning by hiring somebody to train you, but by doing that, you're going to save yourself a lot of time and trouble in the long run. And if you know how to do it well, then you may never need to hire a professional to either clean it up for you or manage it for you if you have that skill. And if you're running just a simple small practice. Okay, monthly routine. Part of the monthly routine that I recommend for my clients is to download and file statements. So that includes bank statements, credit card statements. So you can get paper statements if you have a paper file cabinet. That's fine. In today's age, we don't need to have a physical paper file cabinet taking up space in our office. I recommend just having it done electronically. I recommend, having a local file on your computer is fine, but I think it's also high risk because, if your computer crashes and you can't get the data, then what do you do then? So I recommend having like a secure cloud file system like Google Drive or Dropbox, or if you have an Apple Cloud account. Everybody's on the cloud these days, so I highly recommend having it on the cloud. And just keeping those records. And of course, you can always, you have those records also on your banking portal and your credit card portals, but sometimes some banks or some credit cards don't actually retain your statements past a certain year, and you have to pay a decent amount of money if you need to retrieve those for any reason. If you're in the case of an audit, no one wants an audit, but it's good to at least be prepared if the tax man ever comes to our door. So yeah, you would need these events in the event of an audit. you would likely need these statements. So with that statement, one of the processes that we should be doing as businesses on a monthly basis is reconciling our bank and credit card accounts. And this would be something that you would do inside your accounting software. If you're not using accounting software, if you're just doing pen and paper, or if you're using a spreadsheet, this is probably not a process that you would do. There may be another way of checking, essentially it's like balancing a checkbook, making sure that your bank balance lines up with what you have in your spreadsheets. Okay, setting aside for taxes. This is something that I don't see a lot of folks doing in the early stages of business. So yeah, I would talk to a tax professional, find out what you should be setting aside. And before you even pull money out of your business to pay yourself, put that maybe in a separate account, separate business account, or maybe withdraw it to a separate personal account where you're always going to have that sort of sequestered and set aside. Your tax professional will help you decide what that percentage should be, or maybe even they may indicate a very specific amount per quarter that you should have set aside and paid in. And then, of course, that relates to the next point, which is we need to make sure that we're paying ourselves in business. And if we're not able to pay ourselves quite yet, there's no judgment, no shame in that. In the early stages of business, first year 2, even year 3, year 4, sometimes there's months where, it's more often in the very beginning. It may take some months before you're able to pay yourself anything. But even when you're a ways in, there can be months where it's like, oh man, that was a dry month. And you may have barely covered expenses. You may not have even covered expenses, and you may be leaning into credit card financing in order to support your cash flow. And that's totally normal. The biggest businesses that we see out there went through years and years sometimes of not making money in their business. We look at Amazon and Twitter and Starbucks, Netflix. Some of these businesses were not always cash flow positive. But they had a strategy. That's the difference. They had a strategy, and they had smart investors who knew that strategy and bought into that strategy and were willing to support that. So if you're not able to pay yourself yet, I would encourage you, please take some time to get strategic with your business so that you can pay yourself well doing the work that you love and making great impacts for the folks that you're serving into the years to come. So it's not a bad idea, even if you can't pay yourself a lot, just getting into the motion, getting into the muscle memory and habit of paying yourself something, even if it's $15, even if it's $100, even if it's $400, right? It may not be what you need to pay yourself in full, it'll be sustainable, but at least it's something, right? So the next point here is if you're able to pay yourself, it's a good idea to set aside some savings for future investments in your business, maybe investing in future trainings, maybe investing in equipment, or maybe just having it for when you need it personally if you're going to buy a house at some point in the future. So setting aside for savings is really key. Once you're making consistent revenue, I would recommend just naming a percentage, maybe 1 to 5%, maybe even up to 10% of your revenue could go to savings, depending on your business model, your needs, your expenses. But even if it's only 1%, at least it helps developing a habit of accruing a small amount of savings And it's so key to have some cash reserves, especially when when we're coming into hard economic times. If you have 3 to 6 months of um, savings that allows you to, okay, worst case scenario, what if I don't make any money in my business for 3 or 6 months, which is kind of what a lot of folks saw, in 2020 during the COVID period. It makes it a lot less stressful. It makes it a lot easier to make it through those types of situations where otherwise businesses can feel really hard pressed. And yeah, it also opens up a lot of opportunities if you have some cash at your disposal. Sometimes you can get things when hard times hit. Sometimes people are willing to sell things for, pennies on the dollar. So it can allow you to uh, benefit from opportunities that emerge that could be really helpful for your business. Okay, so the last part here is to review your financial reports. What I'm referring to here is your profit and loss and balance sheet. And this would be more or less if you're in an accounting software like QuickBooks or Xero or Wave. In these programs, if you've done your bookkeeping correctly, you'll be able to pull a profit and loss report, and it should be an accurate reflection of what's actually going on in your business. And this can be really helpful. It's kind of like a lab report. If you're a naturopathic doctor or nurse practitioner, perhaps you're ordering labs for your patients, and that allows you to make really important decisions for the treatment plans and your own strategy of treatment for your patients. Because it's what gets measured improves, right? What gets measured improves because we're able to see what's deficient. We're able to see where the problems likely are. So maybe, you're running your business. You may have already a pretty good idea of where the problems in your business are and what's going well in your business, but to actually see numbers attached to that, numbers represented through a financial statement, sometimes people are surprised when they actually see the real numbers for a month or for a year, and it can be eye-opening. So I think this is it's the pinnacle of doing all this work for, tracking our finances and doing the bookkeeping, to be able to see these reports and be able to make strategic decisions and informed decisions, confident decisions based on what we're seeing in those numbers, and being able to read essentially the story that those numbers are telling. And, in the beginning, you may want to work with a bookkeeping trainer or a coach or a consultant who understands these statements to help you understand and better read into what these statements mean, what kind of decisions can be made based on the information you're seeing on these statements. Okay, so let's jump to quarterly routine now. I recommend my clients to always have some business development objectives if they're growing. If everything's staying the same, you're on autopilot, then okay, you don't really need to do a lot of business strategy. But if you're not paying yourself what you need to be making in your business, then this is where, okay, we need to develop some things in order to allow you to do that. And so I recommend having a business strategy. As part of the business strategy, there should be sort of certain priority activities that should be happening in order to get your business to where it needs to be. And I recommend having objectives in priority in sequence to achieve those business goals. It's pretty easy without those objectives, without a clear goal, in a clear sequence. It can be easy for an entrepreneur to just kind of swim in this sort of kind of piecemeal, sort of scrappy approach to trying to grow a business, which can be pretty inefficient. It can be like spinning wheels and not getting anywhere. So I think it's important to have quarterly objectives, or at least, these objectives sometimes span in my business. I name them as a quarterly objective. A lot of times the objectives carry over to the next quarter. So it may be 2, 3, 4 or more quarters that some of these objectives are being carried out. So this is the vision planning worksheet. I've done another workshop on vision planning, and in that workshop, I go deeper into how to use this worksheet. It's a great idea and a great habit to go into this worksheet and just revisit it. Once you've done it once, revisit it on a quarterly basis, update it, see what's changed, see and reinforce what hasn't changed. And you can kind of calibrate your strategy that way. Once that strategy is laid out, I think it's really important. This is, I think, one of the missing pieces in the business coaching world, is to not only have like a revenue goal for the year, but also to break it down into quarterly revenue goals and break that down even further into monthly revenue goals. And not just that, but to also track it. So the tracking part, did we talk about the tracking part in the weekly routine? I skipped it. So I'm going to name this. This is actually the tool that I'm going to present to you here today. This is the cash flow compass tool. And this is going to allow you to set, take that annual revenue goal that you would have set in the vision planning worksheet and break it down into those monthly targets. And then once you have that, I'd invite you to go in and make it part of your weekly routine to be tracking on a weekly basis based on the money that's coming into your bank account and recording it in your tracker. And even if you're using a bookkeeping system as well, it's going to seem redundant, but I'll just say it's not redundant. It's, the cash flow compass serves a different purpose than your bookkeeping tracking in QuickBooks or whatever software you're using, because this is really tracking against your targets on a weekly basis. So I'll get into that more when we look at the tracker itself. Okay, so I mentioned paying quarterly taxes. These are the dates here in the US and these dates, if the 15th lands on a weekend, it's going to be the next business day after the 15th. Whatever that, sometimes it's the 16th, 17th, or even the 18th if there's a holiday involved somewhere. So again, I would talk to your tax professional if you have questions about what needs to happen there. Okay, so then we have a yearly routine, things that need to happen on an annual basis. Generally, I would recommend, this is a workshop that I often do at the end of the year, setting out your financial goals for the following year in the cash flow compass. So creating that year and monthly goal, that yearly goal and the monthly goals that go with it. I suggest going through the vision planning worksheet again, at least on an annual basis. If you're not doing it quarterly, at least do it annually to update your strategy. And perhaps you want to make a pivot from what you did last year. Just going through this process really helps to flesh out the logic and the strategy, and to make things that maybe are floating around into your head explicit. And sometimes it will force you to even be just more specific. And in a way, by putting it in writing, it enhances our thought processes, and it can take us further and deeper into the strategic work necessary to carry out the strategy. If you're working with a coach or a consultant, or others on your team, this then becomes a basis for you to be able to share your strategy with others, so that you don't have to say everything verbally, that you can have it documented and captured so that everybody's literally on the same page. Okay, annually, of course, we want to file our taxes on time. So being able to collect all your necessary information that your tax professional is going to want from you, your healthcare deductions, home office expenses, mileage, etc. And then, of course, this is something I see a lot of small businesses miss. It's filing 1099s. So if we pay contractors who are sole proprietors or LLCs, essentially the short story here is the IRS considers folks who formed an LLC, single member LLCs, if they haven't elected for S Corp status, in other words, they haven't incorporated, they consider the LLC as a pass-through entity. In other words, they're filing taxes as an individual, and it's tied to their social security number, which maybe that doesn't mean a lot to you, but to them, it means that they're a sole proprietor. So even though they're legal, this just comes back to those two different types of entities, the legal entity and the financial entity. Even though somebody who's a single member LLC has a legal entity of the LLC, the IRS still views them as a financial entity, as a sole proprietor. Okay, so that means that we need to issue those folks 1099s at the end of the year. How do we do that? We need to get what we call a W-9 form from them, so that we have their official business name or personal name, their legal name, their address, and they should be giving you their social security number on that form. So you have to make sure to keep that secure. in a secure place. Don't transmit it via email. If you need to fax it or put it in snail mail and get it back from them that way. Or if you have a way to securely share it through like a Dropbox or Google Drive, that's another way to do it. But at any rate, yeah, so 1099s, we're responsible for better or for worse here in the United States to file those. And if you have questions on that, feel free to reach out to me. Happy to explain more. Oh, okay, so we're required to file those for contractors if we pay them more than 600 a year and they're not incorporated. If we did, there's so many nuances here, so I'm not going to be able to give you the full lowdown. If you paid them with a credit card, you don't have to file 1099. So moral of the story is pay everybody with a credit card or a debit card if you can, or PayPal. Then they worry about it, those payment processors or the credit card companies. If you pay them by check or ACH or Venmo, then yeah, you have to file a 1099. Again, there's a lot of nuances to that topic, so feel free to reach out if you have questions on that. So here are the accounting systems that I mentioned. Gusto is the one that I didn't mention. There, if you have employees that you're paying through payroll, or if you're an S Corp owner and you need to pay yourself salary with state and federal income tax withholdings, then you would, and other withholdings as well, you'd want a payroll processor, payroll provider in order to manage all those tax liabilities. So Gusto, I feel, does a solid job. They're the best one I've seen out there. There are others, but they're the only ones that I can solidly recommend. Okay, so for more info, there's an article here from NerdWallet, which I think is a reliable resource. For those who need a business bank account, Relay Financial is one of my favorite banks. They're a disruptor in the industry. They're making all these other huge banks run for their money because they're creating such a great solution. So they're essentially a fintech solution. It's a virtual bank, and I think it's very friendly to small businesses. If you have an accounting or bookkeeping firm, they work great with accountants and bookkeepers in terms of the accesses that they can provide. You can set rules and restrictions on it as well as far as what can't be done through there, of course. But you can have multiple accounts there and designated for different purposes. There's no minimum balances, so no fees for going below a certain balance. You can issue checks online to your vendors or send them ACH payments without an extra fee, kind of like Zelle. And what's cool is there's a feature in there that allows you to collect a W-9 form from some of your contractors that you're working with, so that they don't necessarily have to send it to you in the mail or by fax. And you can get it right when you're paying them that first time, so you don't have to chase them down later in the year for it. But it also synchronizes well with QuickBooks Online and better than most banks. So in other words, in those softwares, there's what we call a bank feed, where you can basically download every transaction. And yeah, so Relay has come up in the world in the last few years. They've added more features. They have the ability to deposit both cash and checks. So even though they're a virtual banking solution, they partner with local ATM locations that allow you to make deposits for your account. Some cons, just to list them out: they don't integrate with Zelle. So if Zelle is something that you're attached to, then it may not be so useful, but I think it makes Zelle obsolete. So I barely even consider that a con. Another con is it's only available at the moment as of 2025, the year of this recording. They're only available in the US. So if you're in Canada or in another country, unfortunately, they haven't expanded that far yet. And just a disclosure, I do get a little bit of a reward if somebody signs up for a Relay account if they go through me or cite me as the one who referred. I give that to charity. I don't, that's not my business model to make money off affiliate income, but I'm not going to turn it away. It goes towards supporting local charities here in rural Douglas County here in Oregon. So further resources, if you need a QuickBooks trainer, Alicia Katz-Pollock is someone that I've used in the past and someone I recommend. I've had my bookkeeper subcontractors also train with her at different times for specific skills. So, great resource if you don't want to necessarily hire a bookkeeper. I highly recommend having somebody at least oversee your work, make sure you're on the right track if you decide to do it yourself. NerdWallet, I mentioned. Barry Tesler, I mentioned. Great resource for someone who's looking to heal their relationship with money in various ways. Debtors Anonymous. Profit First is a great organization for understanding cash flow. I mentioned the SBDC. They're an organization here in the States, as is SCORE. These are government-funded agencies that support small businesses. Okay, so that's it for part one of today's presentation. That is the financial practices guide sheet. I hope that's helpful for you. You can always come back to this recording. But once you get into these routines, I don't think you're going to need the guide sheet anymore. It's just going to be automatic. Okay, so the second phase here is really going into this cash flow compass tool. And one of the first things that you'll need to do when you come into these Google Sheets, if you're not familiar with it already, you'll need to go to File, and you'll need to make a copy. So I'm going to make a copy here just as a demo template. And demo, make that copy. And if you wanted to do this with the financial practices guide sheet, you could too, and you could start making your own notes in there. Maybe you customize your own weekly and monthly routine with links or different things, links to certain bank accounts that you'll be checking, or links to maybe your own tools that you use. If you have a link to, say, like your personal bookkeeping, Google Sheet, spreadsheet tracker, or whatever it is. So there's a sheet here that you'll see all these series of tabs on the bottom. There's a lot of tabs on this sheet. You can scroll all the way over. I don't want you to feel overwhelmed by this. I just want to point out to you what you're going to be utilizing as you come in here. So the second tab is really just sort of me explaining. This is an anecdote from a client who I've been helping. And this is actually from a couple of years ago. We essentially helped her grow from 344 annual gross revenue to 582 in a year. We made some pretty big decisions for her business that allowed her to make that dramatic jump. But it's through forecasting. We were doing forecasting and basically running her numbers. We set financial goals and we hit a lot of those financial goals. And it was through that, setting a very clear target and then making sure we're navigating our strategy to achieve those targets. That's the power of forecasting. Okay. And, bottom line is she was able to pay herself well. She was able to take vacations with her kids, and, something that she wasn't able to do effectively in previous years amidst her clinic. Okay. So first step here is, this is your starting point sheet. You want to make sure that you have the current year. Right now, the year of this recording is 2025, so I'm putting that. But if you're watching it in a future year, you'll want to make sure that that's updated. And here's where you're going to lay out your annual goal. So the amount that you desire to earn through your business. Let's say that you're just in your, let's say that you're in the early stages. Maybe you're in like year 2 or year 3, and you want to get up to, let's say that you want to hit that $100,000 mark. And I'm going to put the goal date as the first of the year. And basically, within 12 months, we want to earn $100,000. And I wouldn't pay, this sheet is going to know that today is the date of this recording, and it knows, so we're in March, so there's only 278 days left in the year. I wouldn't pay attention to that at this point. But what I like about this is that it's going to break down that $100,000 a year goal into monthly goals, roughly about 8,300 per month. And we have a weekly goal. It's going to divide that by 4.3. There's roughly 4.3 months in 4.3 weeks in every month. So our weekly goal is about 1,900 roughly. And then a daily goal. Our daily goal, based on this trajectory, is that it's assuming there's 5 business days in every week. And, this isn't perfect because it's assuming that we're going to be working every week in the year, which we're probably not, right? So we can adjust this potential, but this is at least giving you a rough mark. So daily goal would be roughly about 387 a day. And it's assuming that you have a 5-day work week. Now you can flip this up. If you think you might only have a 4-day work week, we can change that number to 4. All of a sudden your daily goal becomes higher. You need to be doing more like 485 per day, right? I'm going to leave it as a 5-day goal work week for now. So that's just giving you just some mental calibration of what you need to be pulling through your business on a monthly and weekly and even daily basis. Those are some benchmarks. I'm going to skip this time goals piece. That's a whole other lesson. I'm going to jump to the goals piece. Now that we've had, this is just setting the initial benchmarks. Now we're going to forecast certain revenue streams for your business. So let's say I'm going to take the example of a small clinic, but it can really be any kind of business. This works best for service businesses. If you have a product business, this sheet can still work, but there's going to need to be a way to sum up the data. And this is where you might want to work with a specialized consultant, or you can book a session with me and I can help you model it for whatever business model you're running. But let's just say we have our first income stream as patient appointments, and we have our second income stream as, let's say, supplements, and let's say we have a third income stream of teaching and consulting. And maybe we're going to develop e-courses this year. Okay, so we have 5 revenue streams. That's a lot. That's for a simple practice. Generally, it's maybe 1 or 2 revenue streams, and I recommend really focusing on building only 1 or 2. We don't want to get too diffuse in our business when we're looking to execute a business strategy. So maybe you have 5 revenue streams. When we're talking about developing, we really want to focus our developmental efforts on maybe 1 or 2, is what I'm saying. Okay, so on these tabs on the bottom, you'll see this goals one is marked with the orange. You're going to see goal tracking for each month, January through December, right? And then you're going to see general revenue stream tabs. So I'm going to jump to the general revenue stream 1. I'm calling that patient appointments. Patient appointments. Okay. And let's say that you have, and this is, you'll adjust this for whatever your business model is, but hopefully this demonstration is going to give you an idea of at least how it works. Typically, an intake appointment for a clinic is a different price than a follow-up appointment. So let's say 45-minute follow-up. Let's say 15-minute follow-up. So let's say an intake appointment is, let's say that's $450. Let's say your 45-minute follow-up, and 45, depending on how much you're doing with your intake process, that is probably actually low. If you're putting in 4 hours into servicing the intake of that patient, if you're doing research or anything like that, let's just say 450 to keep it simple for now. Okay, so for follow-up, let's say that your follow-up appointment is going to be for 45 minutes, let's say it's 200. And let's say that you have a 15-minute follow-up. Let's say that is, let's say that's a $90 follow-up. Okay, everybody's gonna have a different pricing structure, but let's just say this for now. Okay, so now we're gonna project roughly how many clients we anticipate seeing per month. Now, in terms of pricing these things, I do have a workshop called the Price is Right workshop, where I provide a tool. It's called the reverse engineer pricing tool. And that's really where we can calibrate whether we're pricing our services on point to what we need to be covering our business overhead and also our lifestyle expenses, whether we're living, just getting by in a survival lifestyle tier, or maybe, what does it take for us to be able to live a comfortable lifestyle? And living a comfortable lifestyle, we may not want to, if you're a therapist or a clinician, you may not want to take more than 15 or 20 patient encounters per week, because of course you have back end work that comes with that as well. So knowing that, that's going to help you calibrate these prices to make sure that they're on point with what you need to support yourself and to support your business model. Okay, so quick mention of that. Let's say that you're doing roughly like 15 appointments per week, but you're building up to that because you're still growing your practice. We're going to say maybe you're seeing 2, maybe 1 new appointment per week for intakes, and you're growing that roughly per month. And slowly you're getting up to a higher number. Let's say, and I'm just kind of, you might taper off at a certain point where you're getting pretty full. And then follow-ups, let's just say you're doing, this is where I would actually be working with the client, in larger workshops. I would actually pull somebody up and we do a demo for them. I'm not going to do that today. I'm just going to do a quick demo, but at the end, I'm going to give an opportunity to book a free complimentary coaching session with me, no strings attached. It's not a sales call. It's just, if you want more help with this tool, I can come in and show you how to fine tune that. And if you wanted to work with me further after that, I'd be happy to offer options. But this is where you might need some more personalized guidance if you're not sure where to go with this tool. So let's just say we're building up. Oops. Okay. Okay, so then we got some 15-minute follow-ups. Maybe we have more 15-minute follow-ups. Maybe we have 15, and then I'm just going to do something fancy here. I'm going to say 15 plus 1, and I'm going to pull that all the way over. So each month we're increasing by 1. Okay, look at that. Okay, so now that we've got the patient appointments laid out, let's go back to the goals and see what we're looking at. Roughly, we're looking at starting at $4,800 months, which is, if we multiply that out, that means that they, at current state of their business, maybe they're earning about $50,000 a year. And we're trying to grow to remember that revenue goal that we set. We're trying to grow to $100,000 per year. So at that pace of getting new intake appointments and getting more follow-ups, we're getting pretty close to that $100,000 goal. How about that? So then, when we put in supplements, I'm not going to build out all the other revenue streams for now, but I am going to put in supplements. We're going to name general revenue stream number 2 as supplements. And again, this is products. So products gets pretty granular. I'm not going to put everything in your inventory here. I'm going to sum this up as average sale. So average sale, we're going to say average sale is, if you fill up a cart for a patient and they're buying it, let's say their average sale is $85. Maybe they're buying a few different things from you. Okay, and let's say that roughly you have like 2 people buying supplement packages from you per month, and maybe that increases. 2 per week, so maybe 8 per month. And maybe we're just going to increase by 1 each month. Okay, we got something. So I'm going to jump back over to your goal sheet. Look at that. You hit the $100,000 mark once you added in supplement sales. Now, bear in mind, supplement sales is revenue. That can be a little deceiving because that's the product. You're going to have cost of goods sold. You have to buy that inventory in order to sell that. You're that, or you're maybe, maybe if it's drop ship, which I recommend, maybe this is straight commissions that you're getting from the drop ship, or probably not. Commissions probably isn't the right word, but it's your cut of the sale. Then that's accurate. But this revenue isn't necessarily an accurate portrayal of how much money is staying in your business. So that can be, but it's still wise to have a revenue goal. So there you have it, 100,000, 105,000 for the year. And next step would be to track. So now that we've set those goals, let's say that you're in January, you're going to look and see how much money is landing in your bank account every week. So at the end, I do my financial routine on Friday. So let's say on Friday, I had money deposit from my payment processor. Let's say I use an EHR and that goes through, let's say Stripe, for instance, or some people use Square, or some people, maybe it's Bluefin or these other payment processes that are linked to different systems or EHRs. Let's say that you had $800 land in your bank account on Friday, right? And let's say that you had 500 arrive on Tuesday. You had 360 arrive on Monday. So on a weekly basis, you're going to be writing how much money is coming into your account. And let's say at the end of the month, we can look and see where you ended up for January. Okay, so far you hit 2,900 of that 5,000 mark. Okay, so let's say that you had your last money coming in on Saturday the 25th, and you're going into the last part of January. You might see, oh, I'm down on my sales. Maybe I need to be booking more appointments or following up with patients to make sure that they're coming in order that that I'm hitting those revenue goals. Or maybe you have outstanding invoices that people haven't paid. Hey, maybe you just need to tap folks on the shoulder a little bit and say, hey, we think you might still owe this. Can you follow up with us on this? Follow up with us on this. And then some months you might hit it. Some months you might be a little short. There's always going to be an ebb and flow, but at least you have a goal. At least you have an idea of what you need to be shooting for. And gosh, do you think you might have a better chance of hitting the goal by naming and keeping your eyes on that goal? Probably, right? So simply the act of having a goal, you'd be surprised, how many folks don't have a goal, right? Without a goal, we just have no direction. Now, do you think that if you have a goal and you revisit that goal multiple times, even write down the goal multiple times, do you think that enhances your chances of success with achieving that goal? Yeah, there's actually been studies that have shown those who write down their goals multiple times have significantly higher chances of succeeding with that goal than those that only write that goal down once. So that's just significant. By going into a goal sheet like this on a weekly basis, we're revisiting, we're kind of internalizing that goal deeper every time we come in and we see, okay, we got to get 5,000 this month, 5,500 next month. It's not all about money. It's not like the success of our business is only determined by hitting our financial goal for the year. But gosh, it's sure nice to have the money when you need it, right? And this is going to support all the other wonderful work that you're doing to make impacts in your community if you're able to run a successful practice. So it's not about being solely focused on finances, but it is about supporting the important work that you're doing. So I hope this has been helpful for you. I'm going to pause the recording now and appreciate, those of us who are visiting us virtually through the recording. Feel free to reach out to me at info@livestreambusiness.com. And I'm happy to answer any questions that you have. If you're watching this on YouTube, please feel free to like and subscribe. It'll help me grow the channel and get this message out to more people. And yeah, I also have a quiz on my website. Check out the link to the website and the quiz. That's a super awesome way to get some insights into how you can be developing your business based on your integral business type. It's an assessment that I've created based on integral methodology, and that will give you an option to book a free call with me if you go through that quiz. And you also just get a wonderful you'll get a wonderful basically report of business recommendations based on the information that you've provided me through that quiz. Okay, thanks all. See you on the next episode. Stop my share here.